What's up, guys? Welcome to Invest Today. My name is Jack. Today, we're going to talk about something essential to the stock market in picking stocks, particularly from a value investor such as myself, and that's the PE ratio, or the price to earnings ratio. And the real question is, what makes up a PE ratio? A ratio typically means two numbers and that they're compared. And in this case, it's true. You take the current share price of the company and you compare it to its earnings per share, EPS. And those two numbers form your nice, maybe round number of, like, let's say 20. And there are many other names for a PE ratio that you're going to hear across the stock market, or maybe some stock news like CNBC. Price multiple or the earnings multiple are also other names that you'll hear for PE ratio. However, on this channel, in this video, I'm going to call it just a PE ratio to keep it simple. I'm not going to switch the wording up on you guys. So all that means, a PE ratio is the dollar amount you have to spend. So it has a PE of 20. I need to spend $20 to gain access to $1 of the company's earnings per share, or EPS. And that's whatever they get their earnings from. Let's say they sell oranges and they have a PE of 20. I need to spend $20 to receive $1 of the company's earnings from their business model, in this case, selling oranges. So all PE really shows is what people are willing to pay. It's intrinsically linked to value of the company, so it shows how the company's kind of valued. Now, the next question is how to calculate PE, and there's different types of PE, and we'll go through them kind of step by step to avoid any confusion. So the first type of PE that we're going to talk about is a trailing PE, and this one's already baked into the numbers, so you can't change it. There's no room for error. It's just a fact. This number, they can't change it, unlike the forward PE, which we'll talk about later. The trailing PE, the way to find that and what a trailing PE is it's the average of the EPS out of a 12-month period for a company. So let's take a company like FedEx. Take the last 12 months, they report quarterly, find the mean of their EPS, which they report. So add up the four numbers, divide by 4 to get their EPS for the last 12-month period, and that's their trailing EPS. So now you subtract the share price at the start of the 12-month term from the value at the end of the 12-month term. And that's how you get a trailing PE. Now, a forward PE, it's the same method, but it's expected EPS. It's from the analyst estimates of what they're going to do. So like, let's say FedEx in 2019, analysts will come out with predictions. They do some complex models, which are frankly above pretty much everyone's pay grade here, but they come out with an estimated EPS. Now we take the average of that and you do the same thing. So instead of taking the average from the last 4 quarters, you take the EPS expected from the next 4 quarters, and you subtract the share price at the start of the 12-month term from the value at the end of the 12-month term, and that's how you get your forward PE. Sounds kind of confusing, I understand. So let's take stock X, and this is not US Steel, ticker symbol X, it is just a hypothetical stock X. Let's say they have $13 billion in profits, and the shares outstanding is 3 billion. You take those numbers, the EPS is 13 billion, you divide it by shares outstanding, which is 3 billion, and you get a number of 4.33. Okay? Now the share price is $50. You take the share price and the EPS, 4.33, and you divide them together, and you get 11.54. Okay? So again, 13 billion profits, 3 billion shares outstanding. Divide the two numbers, you get 4.33. Let's say the share price is $50 currently. Divide that by the EPS, 4.33, and you get 11.54. That would be the EPS. Now, a higher PE, it means higher earnings, growth that's kind of expected in the future. And a lower PE typically means that a company is undervalued. Now, if you see a PE symbol and it equals NA, or a negative number or no number, it means that the company has either no earnings or they're posting a loss. So, for example, no profit. Again, companies like GoPro, Tesla, they don't have a PE ratio because they're actually losing money. Now, the average, just to give you kind of like the S&P 500 average for the entire stock market, is at 25.10 currently. The average typically that the market fluctuates in is a 20 to 25 PE. So the last thing I wanted to talk about in terms of PE is, like, why is it useful to us? Like, why do we use PE? There's plenty of other metrics, but why do value investors in particular gravitate towards a PE ratio, especially a trailing PE ratio? We love that as value investors. And that's because it shows how the company is valued. So take Toll Brothers, for example. It's trading at a PE of like 6 right now. Okay, so the share price has been going down, and therefore the PE ratio has been going down. And then people will look, they'll have like a certain buy-in target, maybe let's say like a PE 8 on Toll Brothers. So when the share price goes down, the PE comes down with it. It shows it how it's valued. Now, Toll Brothers is a great buy. It's one of my biggest holdings. And it's trading at a PE right now of like 6 when the market as a whole is trading at around 25. So when they don't really add up, Toll Brothers is significantly undervalued compared to the broader market. So it might be a great investment for a value investor in the future. They're banking on that PE kind of normalizing, because just like stocks, PEs go up and down, they fluctuate. So if you can catch it when it's low, you can get all that deep value out of the stock and make a great profit in the future, in the coming years. And that's kind of what I'm hoping and planning on, fingers crossed, with Toll Brothers. That's all I have for you guys. Thank you. Please click the subscribe button. Throw me a like, throw me a comment. Let me know what you think of this video. Do you want me to continue some of these price to book, all these kind of metrics to evaluate stock and turn it into a series? Or do you have a particular metric in mind that you want me to go through? Leave it all in the comment section. Thank you guys, and I'll see you next time.